welcome to another episode of Off the Charts. I'm the CEO of TrueShares, Mike Loukas, and today we have our Director of Investment Operations, Andy Lyons. Andy, thanks for joining us.
Absolutely happy to be here. Obviously, a fan of the show.
Yeah, well, I appreciate that. At least I have one.
There you
Uh,
go.
Bad news today. My gut's telling me this might be the last time we do these in golf shirts for the year 2025, but
I hear you. Yeah, Chicago's starting to get that fall brisk weather, but who knew it was coming sooner or later.
yeah, it's inevitable. So look, today we're going to talk about liquidity in ETFs. And it astonishes me to a certain degree that ETFs have been around for, I don't know, I guess maybe at least 25 years, right? Probably closing in on 30 years at this point.
Sure.
And there's still a dramatic misunderstanding or misinterpretation of what liquidity means in an ETF. So I want to throw a couple scenarios at you, and I
Absolutely.
just want you to freestyle and tell me how they, what they mean to you, and we could talk about um, how that might be misinterpreted in the market.
Sounds good.
First is you've got a $150 million fund, and an allocator calls up or an investor calls up, either one would do for us, and says, I've got 30 million to put to work. I want to buy 30 million of this ETF, and what I'm deathly afraid of is driving up the share price with my purchase.
Yep.
Tell me what that means to you and
Sure.
where it's on and where it's off.
A conversation we obviously have quite frequently, and I think an important distinction that I always want investors to really understand is what you're seeing on screen, I call it the secondary exchange traded market of an ETF, isn't really what illustrates what an ETF is able to absorb from an inflow and outflow. So, from your example, if we get a call from an investor and ultimately a very material inflow is on the horizon, what we're able to do is look at another layer of the ETF, which is more the primary side, where the create redeem mechanism comes into play, which I think is a area of ETFs that a lot of investors don't understand how that ultimately operates and how you can very effectively get that type of inflow into the ETF.
So it's a legacy. I mean, I guess this is where the gray area between being listed, right, which people see it
Sure.
as an equity,
Yep.
and being a 40 Act fund, which for the those that don't know what a 40 Act fund is, which I'm sure there aren't many these days, but it's
Sure.
it's like a mutual fund, and the fact that it's open ended.
Yep.
And so the exchange traded part throws everybody off, and they look
Yep.
at it, they see a quote, and they think, okay, this is a stock. I can only buy so much. But the real answer is it's a perpetual offering, right? So think of an IPO, perpetual IPO, where they say we're going to issue 2 million shares, and then there's another million of demand behind that. Then they just
Yep.
get to say, well, we're going to issue another million shares, and we're going to keep
Sure.
issuing shares until we meet all that
Yep.
demand. And then the
Absolutely.
opposite direction, right, with redeems.
Yep.
Um, that
So
that
I
that
think,
makes sense.
yeah, Mike, I think like a really important distinction between those types of funds is that the ETF liquidity is elastic. It adapts and is able to absorb whatever type of demand is ultimately put on it. So, the real life example. So what someone like someone in my desk would ultimately do is we work with some of the best market makers, liquidity providers in the business. And so ultimately what we do is we talk to the investor how about how that inflow or outflow is ultimately going to be facilitated. And then I go to work in terms of how we get that done most effectively. And like you said before, we don't want to move the price. This mechanism and that elasticity of what that ETF liquidity really looks like is that shares are literally created or literally redeemed out and the shares outstanding are ultimately changed based on what that demand looks like. So um, big thing I always talk to investors about, give us a call. Let us help coordinate that liquidity, what I would call an engineering of the liquidity on the back end of these ETFs. So, when I get that call, I ultimately get in touch with our market makers. I look at, obviously I look at the volume on screen, but again, that doesn't tell the whole picture. So what we're able to do is sort of put additional depth out there, essentially putting more bids, allowing that liquidity and that inflow to really have an opportunity to get absorbed. And needless to say, if we do our job correctly, which a lot of this is done on that engineering front end part of it, price should not move. And ultimately, liquidity is something that should be done in the background. A lot of these investors shouldn't be worried about this. But like I said, coordination, understanding where we can help as an advisor, team up with the best in business here, and really help investors feel comfortable about those inflows and outflows. Because I think that it's not very intuitive, right? You think, okay, well, I'm about to put 25-30% on top of the fund. I'm going to move the price, but fortunately, given how we're able to operate within the wrapper, it's important to look through that wrapper and know what we can ultimately do to help out investors. Because at the end of the day, that's really the bottom line, is making this a seamless, positive experience for our investor base.
Yeah, no question. So two terms I picked up in there that I really liked. One, elastic, liquidity,
Sure.
which is great. So you summed up that meandering that I just did for 90 seconds in one word.
I knew
Thank
you'd
you.
like that word.
Yeah,
Yeah, that's
that's
definitely a
great.
Mike word. Yeah.
Right. So elastic
Sure.
liquidity or engineered liquidity. So both of those work for
Sure.
me, and I
Yep.
think those are two phrases that the audience can take out of this pretty confidently.
Yeah,
Um,
absolutely.
let's take it to a different scenario.
Yeah, absolutely.
If back in the mutual fund days, there was always a size screen for platforms, right, to get your fund on all platform. In the ETF world, there's often a average daily volume screen. And you might extrapolate our discussion on liquidity and say, well, why does that matter if there's basically elastic liquidity? Why does an average daily volume matter? And I think it comes down to the spread, right? And I would love it if you
Yeah.
could opine on that for a minute or two.
Sure. Yeah. There's sort of two things that I'll address with that question. Is when you have more when that elasticity kicks in and you're ultimately able to absorb those inflows more effectively, spreads are going to tighten. And when spreads tighten, that means that investors are getting more positive, more advantageous entry points, which of course is what we're ultimately trying to do. Um, and then on the same side, there's a premium discount factor here. So there's an arbitrage mechanism built in with that primary markets that these authorized participants are sort of filling in if there's a dislocation between the market value of the underlying securities and the actual NAV of the ETF. So there's all these different moving parts and mechanisms that are working together to make sure those spreads are as tight as possible, which oftentimes is based on basket construction. Absolutely, something that we very much focus on. Make sure our baskets are effectively put together. We know what's in them, and APs are ultimately easier to use with that. So those two are the two factors, and I think that's the beauty of the ETF wrapper, which we all know, is that these mechanisms, work concurrently, and at the end of the day, they allow those spreads to be advantageous to investors, and those premium discount levels to remain as small as possible as well.
So when you say basket, that's really the portfolio, right? I mean, it's what
Yeah,
the
for
asset
sure.
classes are, what the portfolio mix is.
Sure. Yeah, there's certainly some ETF learning curve technology, terminology, I should say. But some of these words ultimately are very familiar with an investor. Obviously the capital market side is certainly a much more learning curve, but that's why we're here to
Yeah.
help facilitate that process. But yes, the basket is effectively just the portfolio composition.
So how many, we talk a lot about lead market makers, right? Because there has to be one in each of the ETFs.
Yep.
How many market makers on average would you say are trading that name, right? Which also provides depth for the spread.
Yeah, it will depend. Obviously, TrueShares has a lot of derivatives-oriented products and also equity-based products. So it does depend sometimes on the underlying liquidity of those names. It also, sometimes you have one quote based on your lead market maker. That's a requirement. Always got to have a quote out there, and that's mandated. But what you're able to do is on some of these names that maybe if they have some things that are relatively illiquid or things that are harder to price, you can solicit additional market making, which we often do. Because the more liquidity providers out there, the more quotes you're getting, then this process becomes more easily manageable for us. But That's really only a problem, I would say, when the average daily volume of the particular name is pretty low. You look on a screen and just maybe it's early in the day, a name just hasn't traded much, whatever the case may be. But some of these names with more liquid underlying, the liquidity providers are often, there could be two, three, even more on any given fund.
Okay. So if I were to sum this up, tell me where I get it wrong. But if I were to sum this up, I would say the size of an investment, or for that matter, a redeem. We don't like those, but the size of the investment
Yep.
is not necessarily the biggest factor in the execution of those trades.
Sure.
The depth of the market, the daily volume or the average volume of the market, and the spread are far more impacted by what lies behind the curtain, we'll say, as opposed to someone saying, look, the AUM dollar amount or the notional dollar amount of my investment is X percentage of the fund. That almost comes in last when it comes to the liquidity discussion.
Yeah, absolutely. Because it's a little counterintuitive, right? You think I got this fund's called 50 million, and I'm about to come in with another 50. How is that not going to be impactful? So yeah, I mean, it really does depend on that depth, like we talked about earlier, and that's a coordinated effort on our part. Like you said, we like the inflows better. When I see them out there, we go out and get them. Me. So at the same time, we just want an experience for investors that allows a seamless, whether you're in and out. We obviously like in because we ultimately think our products provide a lot of value to investors. But at the same time, everyone's different. They evaluate how this will work best for them, and we're here to provide that oversight in any way we can. For anyone who likes our products and ultimately finds value in what we can provide.
All right, so one last question before we sign off. When you learn scuba, right, and you take your certification test, there's like one cardinal rule. The cardinal rule is
Yep.
never hold your breath, right?
Yeah.
So is there a cardinal rule in trading ETFs that everyone should abide by regardless of what the size of their investment is?
Well, when I got certified in Maui a long time ago, I didn't hold my breath, so I can't I can talk about that. But ultimately, it's just coordination. I think that we have frustrated investors from time to time, and it's almost always they didn't give me a call ahead of time. And I'm here. I'm absolutely. This is what we ultimately want to do, and that's the cardinal rule. Talk to us. Let us help coordinate this for you, and we will get you an advantageous way to get this in. We can talk to you about how to best allocate. If, let's say, for instance, an underlying basket has some liquidity issues, maybe we phase it in. Ultimately, a lot of this stuff isn't urgent. People are, they're holding this for a period of time, whatever works best for them. But I'd say that coordination, transparency, what are you trying to accomplish? And when we know that, we can help much more effectively.
All right, so number one rule, coordination, discussion, communication. For those doing it themselves, I'm going to add rule 1B and 1C.
Yep.
Always use limits.
Oh, thank you for bringing that up. Yeah, that's one too.
You're right.
And you know what? It's funny. It's just such an important thing. And I know early on when you and I, obviously started working together and things, and that was one thing that always drove home to me. And so yes, that is one of the first things I often talk about with, and especially larger investors, because you don't want that phone call,
Yeah.
when things. So for the audience sake, always use limits. Market orders, oftentimes the price you ultimately get can run on you. So understand where you are, but like I said, we can help with where we think a good limit, strong entry point would be, and we go from there.
All right, last one, 1C, rule 1C.
Yeah.
Don't try and trade these things in the first 10 or 15 minutes of the market open.
Totally. Yeah. I mean, that's where I think it's not that you couldn't, right? But I think that's where people see, wow, there's only 5 shares, there's only 100 shares or whatever. I'm about to put 100,000 shares. And it gets investors a little scared to do that. And ultimately, we want this to be comfortable. We want, this is a learning experience too. Like I said before, there's a steep learning curve, and we want our investors to feel what, that learning curve and how and feel what they're doing. They know what they're doing. It's not just relying upon us, but we are help there to guide there. But yeah, those are certainly some good rules. I think they're important to live by. And obviously at TrueShares, we do whatever we can to help those, crystallize to our investors.
All right, you heard it first. Behind every good ETF is a good capital markets guy. Andy Lyons,
Absolutely. There you go.
Director of Investment Operations for TrueShares. Thanks for joining us.
Anytime.
Uh, Again, Mike Loukas, CEO of TrueShares, and we'll see you next time.